What's going on, traders? Hope everybody had a great weekend. It is Sunday, July 11th, and we're here to go over our plan for tomorrow, June 12th. And we'll talk a little bit about the whole week. But before we get into it, of course, this video is for educational and entertainment purposes only. And if you're enjoying the content that we are putting out about the markets, don't forget to subscribe to the channel, turn on those notifications, and give the like button a big old fat kiss. Really helps the channel be pushed out by the YouTube algorithm. Also, I'd love to hear some of your opinions about some of the data that's coming up, and that's really the first thing that I wanted to go over before we started looking more in depth into the charts, because it's going to be very hard to really make any assessments of technical analysis and things like that with so much data coming out this week. So take everything with an extra grain of salt. Be on the defense as we really come into a major week as far as data is concerned. So on Tuesday we have CPI coming out, and then on Wednesday the 14th we have the FOMC rate decision coming out. And then we do have a jobless claims on Thursday, and on top of that we have quad witching on Friday. So options contracts, futures contracts are all going to be expiring, and that can really lead to some whippy price action, some slow price action, just overall an environment that you really don't want to be engaging the market much during. So that being said, let's take a look here a little bit more in depth in the charts. We're looking at, of course, the SPY, the S&P 500 ETF, and we were talking about this flag pattern, right, forming here, and this kind of consolidation channel that we had been trading in for a few days. And Friday we had a breakout of it. However, you can see that there was no follow through, and this could be considered a fake breakout here. Now, we did hold the top of the breakout, and we'll go over this area here. I've got it on this chart at 72, but it's actually a little bit lower than that. And I can just bring it down just a little bit. That's a little closer. But you can see there was no follow through. I got really excited. I thought we were gonna have that nice Friday trendy. I should have known better, because with CPI and all the data next week, it was kind of unlikely that we would really see, a short squeeze. Yeah, so Friday did have some whippy price action. Morning went up very nicely, then the bears got paid, and we saw a retracement, the whole move all the way back down to the start, and then we came back up to kind of close pretty much in the middle. So you can see here where the sellers really came in and pushed that price down right into this critical area. So I would say that is not a good sign. I'm not really too keen on when a market tries to make a move and then can't. You usually see some selling come into the issue, but we'll have to see how things open up and how things are looking in Globex. So let's go into some of the areas now that we're going to be looking at into tomorrow. Again, CPI is on Tuesday, so just as we could see some either falling back into the range, popping out of the range, and just really tricky price action. So let's be on the extra defense this week. So as far as tomorrow is concerned, and I was kind of alluding to it earlier, let's go into our trends here that we have been watching, our consolidation. There we go. Now, this is the base, right? We had rejection here, slight rejection here, 3 times a hit, 4th time, finally made it through. And so this is the structure now, really, that the bulls need to defend. Now you got to give it some time, of course, because you can see here we broke back into the upper range of the consolidation channel, and we got pushed back up higher. So when we're in these key areas here, you don't want to necessarily direct buying the support. The safer move is if it came down and then look, it got bought back up, and then on the recapture, you take the trade. It's a little bit more confirmation. But either way, I'm still going to be watching. If price starts to move under that 428.60 area, so you can remember these are all kind of zones, so could be 70, 60, this 20, 30 cent zone. See if we can get some confirmations, but really we've got to take out this swing low, right? We start getting underneath 428, 80, 88, that zone. Now we can talk about some selling back into the 50% area, and that's going to be the key zone here. So it might not even be a trade that I personally am going to want to participate in the sense that what's the risk to reward from this break? Sure, I could get a potential confirmation under this, and then that's $1, $1.50 or so. Okay, that's fine, that could work for a trade. But you're gonna have a little bit more confirmation really getting under this swing low here. And if we break Friday's lows, okay, and they're able to chew through 428, okay, then we can look for selling to come into the lower part of the range once again. Now, will we finally see the break? I don't know. Probably not, considering the data that's going to be coming out. So when that comes out, who knows? We might break through it or rip up higher. It just really depends on the CPI print. But we'll get a little bit more in depth into that in Monday night's video. So that's what I'm thinking as far as the bear case and really what the bulls need to hold, right? So those are some areas that I'll be watching to see if we actually get under, and then I'll see if I even want to engage the market. Maybe I won't. Maybe I'll just watch, and stay out. And, either way, it's going to be more of a scalping type of environment, and again with smaller size, just to be on the extra defensive as we move into this week. Market's not making it easy for us, right? And here, for the bull case, right? Short term, this area here where we did come down and saw some buyers. Again, it could be, we could call it a little zone if you want to. 430. 75 down to 430.50, about a 20-cent range here. You can see the reactions on this candle, the 3 o'clock candle, and of course this 10 o'clock low here. So I think for me it's going to be a little bit of a short-term pivot for chances to come back and retest the top of this range. Again, it's risky. That's not. That's again is more of a scalp trade. $1.50, $1.75 or so. But if you're looking for that breakout trade, of course, you got to break over these, Friday's highs, come back, retest, see if it's retested, and then, wait for it to come up. And that will probably give you a bigger move overall. So it just kind of depends on what type of trader you are and how you like to engage the markets. These moves, I don't really play 0 days anymore, but these moves can still pay, but, I'll just really have to see. It'd be more likely if I'm going to play options to see if I could find something with relative strength that's moving nicely, and then that's disconnected from the market, or weakness, either way. But something that is just doing its own thing and not really engaging the markets like SPY and QQQ and IWM, the indexes too much. So that might be something that you want to consider as well. But let's just go into our fibs here. So, and there is some confluence that I wanted to point out again in this 64 area, 429, 64, 70 zone here. And as you can see, if we just go to our day trading, oops, just the right one. I think it is. Okay, it's not on this. Sorry. Okay, it's on another chart I'm thinking of. Either way, on the fibs here, I have updated them, so we can just take a quick look. And we were talking about, some of those other smaller levels that we can, talk about breaking out, or if we start to break down to take a, keep an eye on. However, bigger picture, yeah, we could see some selling, and this would be a quite drop, right? 429, or even taking out here 428, coming down to 426. Okay, that's definitely could be workable, but we're going to see even a bigger move if we really start to take out this 23.6 and these lows here from Thursday, right? We start taking out that, and that again is the bottom of the range of this, bearish channel that we have been watching here. I don't have it highlighted on the fibs, but you can see it here. Multiple highs, right, and the lows. Okay, so bigger picture though, take out that, and then we're going to be looking for even bigger moves down to 423 area, and possibly even 420. I would also watch out here, kind of see how I have the fib, and then I have another line right here at these lows. See, for this one I would even maybe do the same thing, this 423.50, but see the equal highs here of these two candles. So for me, I would probably do this to kind of make a little supply zone here, or excuse me, demand zone, and that if it breaks over, okay, then you have even more confirmation down. But just because it breaks the 38.2, you still just have to be aware of these equal highs here, and just keep an eye on that. And even, to be honest, as I'm looking a little bit closer, I'm not zoomed in, but probably since that was the turn candle, and that I would even make it a bit wider, and this was the turn candle. Because these are actually aren't, I mean, they're pretty close, these highs, but there's maybe a 10-cent difference there. I don't know if that really makes a difference too much in the markets, but it's something to consider. And also, you see the reaction here, the turn here, and the low of this candle here. So I like this area here better at the 422.50, and then yeah, we'll probably sell down a little bit lower to come into the 421 area, 421.95 or 420.95 or so, here at the 50% retracement. So updated those are some areas I'm watching as far as the fibs are concerned. Other than that, I think I pretty much covered everything I wanted to. Let's just take a quick peek at the fib and channel. I wanted to see I updated this. I don't know if there is anything that I wanted to say. Oh, there is one actually bigger picture thing that I did want to say about this, the megaphone pattern, right? Now, yes, we break below this consolidation channel, sure. But the other thing that I definitely think we should be aware of was this megaphone structure too. And if we, depending on when we come down and break, I mean, it seems like it's going to be an inevitable event at some point this week. Now, of course, data could just go, and rip us right through it. But under normal circumstances, I would also be watching, and it wouldn't surprise me either to see a retest of, this megaphone channel. And it might be a nice opportunity to be able to get long, to, overall, if you're still bullish, for maybe even a potential swing trade. Directly buying could be a bit risky if we have strong momentum down, but breaking under and then getting back over could set us up for a nice opportunity. So I'll just definitely be keeping an eye on this bigger structure as well, because this is really going to, yes, we have this consolidation channel, but breaking this way, this more macro structure, okay, then we're moving back into this range that we were in before, and that's going to be a bad sign. If we were up here, we get back under, that's going to be an even bigger failed breakout, which may propel us down here lower. And yeah, and let's just take a quick peek here at this 419.85. Now I don't think we got down that lower, but before. But let me just take a quick peek. Okay, it doesn't. No, I thought maybe we would see a lineup in that price with these fibs, but we don't. Okay, that's fine. Oh, it's on the. There we go. Sometimes my mouse freezes here. Okay, this is the one I want. So that 419 would be somewhere here by the 618, I guess. Just so that we can see it a little bit closer. I thought we might have some confluence there between the 61.8 and the 23 on the bigger picture Fibon channel, but we don't. But it's close. Anyway, all right. So that's pretty much everything I need to go over. Be smart, be safe, and take care.